Hi, Suzy Rhodes with Past Masters, here with this week's questions of the week. This week we're going to do a top-off exam from the Series 6 course. So for those of you that are looking to sell mutual funds and variable products, let's check out the 50-question final exam from within the Past Masters course. An advertisement can offer something for free when there are no strings attached, with approval of a firm's principal, with permission of FINRA, or any time. The best answer to this would be when there are no strings attached. Click check answer. You know you got it right if you get that green check mark. You can click show explanation, read the rationale, and you can also listen. An advertisement can offer something for... All of our questions have audio explanations as well. Following the phases of the business cycle, the U.S. economy expanded, peaked, and then it contracted. Following the contraction is a trough. Which of the following would most likely be found in the trough? A high rate of inflation or a low rate of inflation? A high rate of unemployment or a low rate of unemployment? So the trough, so after the contraction is the trough, right? The valley, the bottom. We're going to have a high rate of unemployment. And in a trough, we're going to have a low rate of inflation. 2 and 3. Which form is required to be filed with the SEC within 4 business days of a material event? 8K, 10K, U4, or 10Q. Well, 10Qs are filed quarterly. A U4 applies you for registration to take this exam. 10K is filed annually by publicly traded companies through the EDGAR system with the SEC. It has annual audited financial statements. It is the 8K, we call it the current report, that must be filed within 4 business days of a material event. Which of the following would have an adverse effect on the return of an equity REIT? So an equity REIT owns properties, low interest rates, high property values, high occupancy rates, or overbuilding. Overbuilding is going to have an adverse effect on the return of an equity REIT. Equity REITs depend upon rental income to be profitable. The other 3 would all have a positive effect for an equity REIT. An issuer may use warrants in which of the following situations? Attached to common stock to maintain proportionate ownership, attached to secured bonds requiring the issuer to pay a higher interest rate, attached to debentures allowing the issuer to lower the interest rate, or attached to preferred stock ensuring the nominal yield is above current market rates. So warrants are most of the time attached to debt. So our choices as far as debt go are secured bonds or debentures. We sometimes call warrants sweeteners. They allow the owner of the bond to detach the warrant and buy a specific number of shares of common stock at a specific price. So the warrant itself represents an option to buy stock. We call it a sweetener. It allows the issuer to lower the nominal yield, to lower the interest rate. So of these choices, attached to debentures, allowing the issuer to lower the interest rate. Which of the following statements is untrue regarding a master limited partnership? They guarantee higher yields than bonds and stocks due to their favorable tax structure. Investors typically receive a Schedule K-1 from the partnership. They are a pass-through tax entity. They are more liquid than traditional partnerships. So which one is untrue? They guarantee higher yields than bonds and stocks. They can't do that. Master limited partnerships. The other 3 choices are all true. All of the following are true regarding able accounts except what is false? The earnings are taxable when used for qualified disability-related expenses. They do have annual contribution limits that vary by year and total contribution limitations that vary by state. That is true. They are funded with after-tax dollars. They are also called 529A accounts. The only one of those that is false, the earnings are taxable when used for qualified disability-related expenses. That is false. That's the whole point of that the earnings are tax-free when used for qualified disability-related expenses. In sales literature for a mutual fund, average total return must be included for the life of the fund, 1 and 5 years, 1, 5, and 10-year periods, or the life of the fund if shorter, 1 and 10 years. The answer is 1, 5, and 10-year periods, or the life of the fund if shorter. It's important to look at it not just over the last year, 1, 5, and 10-year periods. In order to sell variable products, which licenses are required? Series 6 and life insurance in Series 65, life insurance or Series 6. Life insurance and Series 6 are required in order to sell variable products. That's why you're here. Rule 144 governs private placements, exempt transactions, the sale of restricted and control stock, or exempt securities. It is SEC Rule 144, and it governs the sale of restricted and control stock. Firm procedures related to institutional communications are most like those followed for retail communications, roadshows, complaints, or correspondence. Institutional communication rules are most like those the firm has for correspondence. Retail communications are subject to much more requirements. The statute of limitations in filing a claim to arbitration is 2 years, 8 years, 4 years, or 6 years. It is 6 years, the statute of limitations in filing a claim to arbitration. Your client would like to invest in a mutual fund that has low expenses. He doesn't believe that any portfolio manager can beat the market as a whole. Which is the most appropriate investment for your client? Special situation fund, growth fund, global fund, or index fund? Well, low expenses, and he doesn't believe in active management, that's describing an index fund. So index funds really popular due to the low management fees. So perfect for this client. Which of the following is not considered an institutional client? Member firm, individual participant of a qualified plan, bank, or investment advisor? Not an institutional client, an individual participant of a qualified plan. They're a retail client. Under SEC's Regulation S-P, firms are required to have policies and procedures addressing the protection of inside information, research reports, employee records, or customer information and records. SEC Regulation S-P is the financial services adoption of the Gramm-Leach-Bliley Act. So it has to do with protecting customer information and records. Which of the following correctly describes dollar cost averaging? Investing the same amount of money at regular intervals? Selling when the market approaches resistance? Buying the same number of shares each month? Or investing when the market has fallen 10% now? Dollar cost averaging, investing the same amount of money at regular intervals. So advantages include when the price is going up and down and over and down and up and up and up and up and down. You'll get more shares when the price is lowest, resulting in an average cost per share that is less than your average price. However, if the market is going up and 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 up, you might have been better off to put in all your money all in the beginning. So that is a disadvantage of dollar cost averaging. Granted, we don't have a magic crystal ball. If you do, send me a note in the comments below, right? Yeah, no, we don't have that. So dollar cost averaging is defensive. You might not have outsized profits, however, which is an accurate description of a rights offering. A period of time when the stockholder can return the shares to the issuer, an offering of additional shares for no additional cost, an offering made to common stockholders that allows them to buy more shares before they are available to the public, or the sale of shares to the public through an underwriting syndicate. So the issuer knows that the person most likely to buy an additional share is someone who already owns a share. If they do buy more shares, then they will not have their percentage of ownership diluted. So an offering made to common stockholders that allows them to buy more shares before they are available to the public. Rights offering. It's a short-term option, good for 30 days. Which of the following is not a requirement under ERISA? Eligibility requirements, vesting requirements, semi-annual communications, or non-discrimination. Not a requirement, semi-annual communications. Communications are a requirement. Of the following debt issues, which has a maturity of 1 year or less. 1 year or less, we call those money market instruments. Treasury notes, Ginnie Mae bonds, Fannie Mae bonds, or money market instruments. Oh, it is money market instruments that have a maturity of 1 year or less. So the bulk of the money market is comprised of Treasury bills. Treasury bills are sold at a discount. They mature in 4 weeks, 13 weeks, 26 weeks, and 52 weeks. There's other instruments, but the bulk of the money market is made up of T-bills. Under Rule 503 of the Securities Act of 1933, when is an issuer required to file a notice of sales on Form D? No later than 20 business days after the first sale of securities in the offering, before sales occur, within 2 business days of the first sale, or no later than 15 calendar days after the first sale of securities in the offering. That is the requirement under Rule 503 of the Securities Act of 1933. The notice of sales on Form D filed no later than 15 calendar days after the first sale of securities in the offering. Now note, everything is subject to change over time. So this is the current rule for the filing of Form D. When it changes, of course, everything will get updated when the actual exam reflects the change. I'm not saying it's changed, I'm just saying I know certain things down the road are changing, and sometimes there's a lag between the change and when it shows up on the test. Your client has given her lawyer limited power of attorney over her brokerage account. Regarding confirmations, which of the following is true? Both the client and the lawyer must be sent confirmations. Confirmations may be sent to the lawyer if the customer requests it in writing, and duplicate confirmations are sent to the client. Only the client can be sent confirmations, or the lawyer cannot be sent confirmations. Confirmations may be sent to the lawyer if the customer requests it in writing, and duplicate confirmations are sent to the client. Which obligation under Regulation Best Interest requires the firm to establish, maintain, and enforce written policies and procedures reasonably designed to achieve compliance with Regulation Best Interest? The care obligation, the conflict of interest obligation, the compliance obligation, or the disclosure obligation? It is the compliance obligation that requires firms to establish, maintain, and enforce written policies and procedures reasonably designed to achieve compliance with Regulation Best Interest. Regarding communications with the public, which statement is correct? A correspondence is subject to the principal pre-approval rule. Retail communications must be kept by the firm for 3 years from first use. Websites are excluded from the definition of retail communications, or institutional communications are written communications made available to institutional clients. Those first three choices, those are all false. The only statement that is correct is institutional communications are written communications made available to institutional clients. The broker-dealer must disclose the capacity in which they acted on the client's semi-annual report, annual report, confirmation, or quarterly statement. Did they act as a broker or dealer is disclosed on the confirmation. The commission must be disclosed if they acted as a broker. When they trade out of their own account, they're acting as a dealer. They charge a markup or mark down. Which of the following are taxable at ordinary income rates? Roman numerals 1 through 4. 1, wages. 2, qualified dividends. 3, interest. 4, alimony. So wages, taxable at ordinary income rates. So 1 is part of the correct answer, so you can get rid of 2 choices. Qualified dividends are taxable at long-term rates. Interest, ordinary income, and alimony is not taxable. It's not tax deductible to the person who paid it. It is not taxable to the person who received it. Same for child support. Warrants are options that are good for up to 90 days, 30 years, 30 days, or 9 months. So warrants are options that are often attached to bonds. Corporate bonds are good for up to 30 years. Rights are short-term options, good for up to 30 days. Calls and puts are options, good for 9 months. Which are true regarding the review of internal communications and correspondence at a member firm? The review may be conducted by a registered representative. The review must be evidenced in writing on paper. The review must be conducted by a registered principal. It is the registered principal's job to do the review. The review must be evidenced in writing, either on paper or electronic. 3 and 4 are correct. It is the principal's job to review everything, including internal communications and correspondence. A program disclosure document is given to investors when they are purchasing a 529 plan, private placement, shelf registration, or new issue. It is a 529 plan in which a program disclosure document is given. So it falls under the category of municipal securities, but you don't give out an official statement like you would give out if you were selling a new issue of muni. You don't give out a prospectus, which is what you'd give out if you were selling a new issue of stock. You give out a program disclosure document. Who oversees FINRA's Department of Enforcement? The SEC, COA, NAC, or COP? So the SEC oversees the entire securities industry, but who oversees FINRA's Department of Enforcement? The National Adjudicatory Council oversees the Department of Enforcement. The National Adjudicatory Council is found within FINRA. Variable life insurance policies must include a free look provision. This provision must be no less than 10 days from policy delivery, no more than 30 days, no less than 10 days from policy delivery, or 45 days from the date of application, whichever is longer, or no less than 45 days from the date of application. The correct answer here for the free look, no less than 10 days from policy delivery, or 45 days from the date of application, whichever is longer. In an attempt to control the economy, the Federal Reserve has raised interest rates for the past few years, but the market expectation is that they will now begin to lower them. Your client is concerned about the volatility of interest rates. Which of the following is a recommendation that does not have interest rate risk? Bank CDs, corporate bonds, municipal bonds, or preferred stock? When we talk about interest rate risk, we're talking about a security's market price moves inversely to interest rate changes. So bonds, fixed income securities, have interest rate risk. Preferred stock has interest rate risk because it has a fixed dividend rate. The only one of these 4 that does not have interest rate risk is a bank CD. The bank CD is not a security at all. Certainly at maturity, it has reinvestment risk. If interest rates have fallen and the bank CD was paying more than the current interest rates, they're going to have a hard time earning the same amount that they were earning in their bank CD. But there is no price. There's no market price for a bank CD. The bank CD promises to pay whatever interest rate it promises. And then at maturity, the investor has reinvestment risk. Which SEC rule allows for securities to be sold in one state only? 147, 501, 144, or 504. It is SEC Rule 147, the intrastate offering rule. It allows for a security to be exempt from federal registration if it is sold in one state only. There's a little bit more to the rule than that, but that's the basic gist of it. When a portfolio's actual return is more than what is expected using the capital asset pricing model, that excess is called correlation, beta, alpha, or Sharpe. That excess return is called alpha. We always want positive alpha. Andrew and Natalie would like to own their securities in a matter in which, when one of them dies, the interest automatically passes on to the survivor. Which type of account registration is most appropriate? Joint tenants in common, TOD account, joint tenants with right of survivorship, or individual account. It is joint tenants with right of survivorship. So whichever one of them dies first, the assets in the account automatically pass to the survivor. Joint tenants with right of survivorship. The asset must be owned equally. Market sentiment is measured primarily using technical analysis, fundamental analysis, stock prices, or qualitative analysis. Well, fundamental analysis and qualitative analysis are the same thing. So we're left with technical analysis or stock prices. The best answer here, market sentiment, is measured primarily using technical analysis. Under FINRA Rule 5310, best execution and interpositioning, when the broker-dealer cannot execute with a market but must employ a broker's broker in order to ensure an execution advantageous to the customer, the burden of showing the acceptable circumstances for doing so is on the registered representative, broker-dealer, registered principal, or customer. So generally, this would not be an allowable practice unless the broker-dealer can prove that it is in the customer's best interest. Which of the following open orders are automatically adjusted when a stock goes ex-dividend? Open buy stops and open sell limits, those marked good till canceled, all open orders, or open buy limits and open sell stops. The orders that are automatically adjusted when a stock goes ex-dividend are those that exist below the current market price. We remember those with the funny little acronym of OB-LOS, open buy limits, and open sell stops. FINRA Rule 6140, other trading practices, prohibits a member from activities that are designed to create a false or misleading appearance of active trading in a designated security, or creating or inducing a false or misleading appearance with respect to the market in such security. Activities prohibited by this rule would include which of the following? Roman numerals 1, 2, and 3. 1. Any transaction in a security which involves no change in beneficial ownership. 2. Orders for the purchase of such security with the knowledge that another order of substantially the same size at substantially the same price has or will be entered by or for the same or different parties. 3. Selling shares of an initial public offering to the immediate family member of a registered representative. So which of these activities are prohibited by the FINRA Rule 6140, other trading practices? It is Roman numerals 1 and 2 that are prohibited under this rule. All of the following would be allowed in a generic advertisement except what is not allowed. Reference to a specific security, An explanation of the various types of investment companies, a description of the exchange and reinvestment privileges, or information about the securities investments offered by the firm. So which one's not allowed in a generic advertisement reference to a specific security? Which federal rule allows for a new issue to be registered in one state only? 147, D, S-P, or 144? 144 is the rule that governs sales of restricted and control stock. S-P is financial services adoption of a privacy rule. Regulation D is the federal private placement rule. It is SEC Rule 147 that allows for an intrastate offering to be an exempt security at the federal level. It must be registered with the state that it is going to be sold in. Treasury stock has what effect on shareholders' equity? It increases it, it decreases it, it doubles it, or it has no effect. Treasury stock decreases shareholders' equity. So treasury stock occurs when the issuer goes into the secondary market and buys back previously issued shares, so that there is a decrease to the shareholders' equity by the amount of the initial investment made by the public. Which of the following securities has the least credit risk? Debenture, secured bond, common stock, or AAA rated bond? So when we talk about investments that have credit risk, are we talking about bonds or stock? We're talking about bonds. Bonds are rated for safety. The issuer may go broke. The bond represents the promise to pay principal back at maturity and along the way semi-annual interest. So debt securities have credit risk. Equity, common stock, does not have credit risk. Has other types of risk? Sure. Has business risk? Yes. So of those four, the one with the least credit risk. Remember, common stock is not a promise of anything, so it has the least amount of credit risk. In order for an issue to be exempt from federal registration when sold intrastate, which of the following is true? 75% of the purchasers must be in the state, 60% of the purchasers must be from another state, 100% of the purchasers must be from the state, and a significant portion of the proceeds must be used in that state. 75% of the revenue must be from in the state. So this is Rule 147, SEC Rule 147. All of the purchasers, because the issue is only going to be registered in that state. All of the purchasers must be from that state, and a significant portion of the proceeds must be used in that state. Yes. Upon Marty's death, his son Henry inherits shares of NTDOF, that's Nintendo. Marty purchased these shares at $200 a share in February 2017. As of his date of death, the shares were valued at $300 each. What is Henry's cost basis? So when you inherit securities, the question really is, do you inherit them at the historical cost or at their fair market value as of date of death? When you inherit securities or a house, whatever sort of asset you inherit it at the fair market value as of date of death. In this case, the shares were valued at $300 each. So if Henry had been gifted shares by Marty, then Henry would have assumed the original cost basis. Gift would imply that Marty was still alive. So inherited, Marty passed away. So date of death, fair market value, that is Henry's cost basis. And then if he sells them for more than $300 a share at any point, no matter how long he actually owned them himself, the gain would be taxable at long-term capital gains rates under current tax code. Barry invested $50,000 into a blue chip fund on December 1st. On December 15th, he received a $2,500 long-term capital gains distribution. How is this distribution taxed? Long-term capital gain, ordinary income, short-term capital gain, or tax-free if automatically reinvested. Well, let's see. Distribution, long-term capital gain distribution, has nothing to do with Barry's holding period. So they're trying to trick you in this question. It is taxable as a long-term capital gain. Don't get tricked. All of the following are true about a letter of intent, except what is false. When a letter of intent is signed, the investor qualifies for the reduced sales charge up front. True. The investor can backdate the letter of intent up to 13 months. Some of the shares are held in an escrow account in the case the letter of intent is not fulfilled. That is true. The letter of intent is good for up to 13 months. That is true. The investor can backdate the letter of intent up to 3 months, 90 days. So this is the right answer because this is the false statement. When a discount bond nears its maturity date, its price stays level, goes down, increases, or fluctuates. So a discount bond is one that was purchased for less than par value. When a bond reaches maturity, whoever owns the bond at maturity receives back what? Par value. So when a discount bond nears its maturity date, its price is going to increase. And by the time it reaches maturity, it will be par value because that's what it's worth. Which of the following is incorrect regarding the capital asset pricing model? The theory states that the higher the risk taken, the higher the potential return. The theory believes that each investment carries 2 types of risk. The theory can be used to determine an asset's expected return. The theory believes that systematic risk can be diversified, leaving unsystematic risk as the only risk to consider. The only incorrect statement here is the theory believes that systematic risk can be diversified, leaving unsystematic risk as the only risk to consider. That is backwards. So the way that that is written is false. The true statement would be the capital asset pricing model believes that unsystematic risk can be diversified, leaving systematic risk as the only risk to consider. So the capital asset pricing model built on the work of Harry Markowitz and his modern portfolio theory. We use the capital asset pricing model to determine an asset's expected return. The higher the risk taken, the higher the potential return. Yes, 2 types of risk, systematic and unsystematic. All would be disadvantages of investing in euro dollars bonds, except they have no currency risk to U.S. investors. There may be a lack of transparency since they are not registered with the SEC. They have political and currency risk. They have less liquidity than domestic issues. So all are disadvantages except which one's an advantage? They have no currency risk to U.S. investors. They are denominated in U.S. dollars, euro dollar bonds. All of those other 3 are disadvantages. Under Internal Revenue Code Subchapter M, what percentage of a fund's net investment income must be distributed to shareholders in order for the fund to be considered a regulated investment company, RIC? 75%, 80%, 90%, or 10%? To be considered a regulated investment company, the fund must distribute at minimum 90% of their net investment income to their shareholders in the form of dividends. So the whole rule is all about avoiding taxes at the fund level on the net investment income. So if they distribute 89%, then they did not meet Internal Revenue Code Subchapter M, the conduit theory. 100% of the firm's net investment income would be taxable. If they distribute 95% of it, then the 5% that they kept would be taxable to the fund. So the dividend is always taxable to the investor. It's just, does the fund pay taxes on its net investment income? If it follows the conduit theory, the Internal Revenue Code Subchapter M, then they do not have to pay taxes on whatever they distribute, so long as they distribute a minimum of 90%. All right, we got 100%. Thank you so much for doing that with me. That was a challenging exam. Series 6, the top-off exam, so that you can sell mutual funds and variable products. There's a lot of information covered within that exam. Only 50 questions, of course. Let's look at the score report. So after you take an exam within the Past Masters course, you're going to click View Score Report, and you will see that there are 4 sections within the course. These 4 sections match with FINRA's content outline for the Series 6. So seeks business for the broker-dealer, opens accounts, provides customers with information, and obtains and verifies instructions, properly weighted to reflect what you can expect to have on the actual exam. Within each of the sections, you can see each of the topics that are covered within the course. So let's say in section 2, you missed a question on types of clients. This here would have been red. It would have shown what you had chosen. It would have shown what the correct answer is. We can see here the full rationale, and we can also—
Andrew and Natalie would like
to listen. So I call that making your corrections. So whenever you take a final exam or any exam within our course, you can review the course and learn from it. Anything that you missed, you really want to reinforce what you needed to learn so that the next time you see that question, you get it correct. We never say that these are the actual questions on the test. Number 1, that is not allowed. And number 2, that's not my job. My job is to teach you the concepts that you need to know to pass your exam. Thank you so much for watching. Please give this video a thumbs up, subscribe to our channel, and turn those notifications on. If you have any questions about this Series 6 final exam or about the Series 6 exam in general, just ask me in the comments below. If you'd like to check out Past Masters course offerings or to enroll in any of our programs, there's a link found in this video's description. Keep up the good work. Happy studies. Study. Study, study, pass.